Hello traders and welcome back to the channel once again. So today we are going to continue, or we are going to talk about order block refinement, or this is the part 2 of order block refinement. In part 1 we discussed about the two conditions of refining order block, where we talked about the lower time frame refinement and also the candle body refinement. So what we are going to discuss next is that we need to also understand, after being able to refine your order block, the conditions or what makes that particular order block valid. So kindly watch this particular video to the very end so that you will understand everything. Now, we talked about, or in our previous video, we talked about the order block refinement or the lower time frame refinement. For instance, we are having this is a trade, or we are having another block over here on gold. This is another block over here on gold. Now using this whole zone as your order block makes this particular trade or this particular trade comes with a very big stop loss from here, and then this becomes, for instance, if you want to swing, this becomes your trade. But you see from here, this becomes very big. I told you that the reason why order block refinement is important is that without or considering the entire zone from a higher time frame, you have, or your stop loss become very bigger. You have a poor risk to reward ratio, and the entry as well becomes very bad. So what you can do is that you can scale down into a lower time frame. You can scale down to a lower time frame, and then within that order block that you picked from your higher time frame, you look for an order block within that particular range, or within that particular, for when you switch from the higher time frame to the lower time frame, you are going to see that it's some kind of either a swing or is some kind of a range. So we look for an order block or a valid order block within that particular range from the higher time frame. So for instance, over here we can identify another block like this. Now when you go to the lower time frame, or when you check over here, you can see that markets triggered exactly to that particular zone. Same way we can as well switch to our 1 hour time frame. Same way we can switch to our 1 hour time frame, just to check, or just to see if we can still refine our order block so that we can increase our trade. So when we come to our lower time frame or 1 hour time frame, we could see that we are having something like this over here. Let's see if market actually triggered that particular point. So you can see that exactly that particular range. So instead of this particular level, or instead of choosing this particular level as our entry, if we had been able, or if we had refined this particular trade properly to get or to notice this particular point, this is where we would have entered our trade from. This is where we could have entered what our trade from. That would have become, this would have been what our trade, and what becomes our risk to reward ratio. So this becomes our trade, and also our stop loss below that particular range. So if this is our trade, now we are getting almost about 1:4 risk to reward ratio. We are getting about 1:4 risk to reward ratio compared to our daily time frame, compared to our daily time frame, where we were having about 1 is to where we're having about 1 is to we were having about 1:2 risk to reward ratio from entering from this particular range or this particular order block. And also we've been able to reduce what our stop loss as well. So that is it when it comes to what order block refinement. Now, since we have understood how to refine our order block, also we need to understand how or what conditions makes the order block, or how do you determine that you are going to use, or you can use this particular order block after what refining the zone, or after refining your zone, your order block from your higher time frame. So just as we discussed when we are talking about valid order blocks, a refined order blocks also needs to be valid, and there are a few conditions that helps you to understand that the zone that you are picking is a valid zone. Now, one thing that you need to keep in mind, or the first condition that we are going to talk about, is that the structure of the market. All right, the market structure must align. The order block that you are choosing should align with the structure of the market. So if the market is bullish, let's say if the market is bullish or is bearish, the order block that you are going to be picking must align with the structure. So considering this particular trade on gold, we see that gold has been very, very bullish from here. Gold has been very, very bullish throughout, and we are having this particular, we are sitting on a support zone around this particular area. All right, so we see that the entire the main direction of gold is bullish. All right, so once we refine the zone, or once the order block that we are going to be choosing is aligning with the direction of the market, that is one condition that you need to pay attention to. The second one is that when you refine it, let's say over here, we've chosen, or when we go down to the lower time frame, all right, we should look out for liquidities around that particular order block that we are going to be choosing, because before our institution move price, they usually takes out liquidity. So from this particular refinement that we just did, where can we spot our liquidity? So secondly, you need to look out for the liquidity. We saw that this area over here, is a liquidity that market came to take. All right, this is a liquidity or inducement, anyhow that it works for you. So the second condition for a valid refined order block is also what? First is market what structure must align with market structure. Secondly, it's about liquidity. So we've been able to spot liquidity from this particular what? This particular level. Also, the third condition that we need to consider is what? A displacement or a strong what move around that particular what? That particular zone. So when, if we check over here, or if we check the order block over here, the refined order block, so can we spot? You could see that there were what? Strong what candles or strong bullish candles what move from that particular what, that particular zone as well. So you need to look out for displacement around that particular zone as well. And also, if possible, or if we are able to spot, we need to have imbalance, because mostly the best refined order block usually what leaves insufficiency around that particular zone. So if we are able to spot about two or three of this particular condition around that particular zone, or that around your refined order block, that makes the order blocks very, very valid. So considering this particular one, considering this particular refined what order block, we will see that, or we understand that the direction of gold is what is bullish. Now we see a break of structure around this particular zone. We see a break of structure around this particular zone. There were also a break of structure either this zone or, all right, so we see more break, continuous what break of what structure. Now we look out for liquidity. We saw that market took out what this particular liquidity over here. So we now have what trend, a confirmation of the trend. Now the order block that we are going to be using aligns with what the direction of the market. Also, we've been able to what spot our liquidity. Can we spot something like a displacement around that particular zone? If we check the candlesticks over here, see this strong what candle move over this particular zone. So it could be, or this can be what a displacement indicating what strong what bullish a strong bullish what pressure from that particular point. And also imbalance over here, we don't spot, or there's no imbalance over here. But once we have some conditions, or some of these conditions aligning with that particular zone, it tells you that the other blocks, or the refined order block that you are choosing is more valid. So that is how you determine, or that is how you determine your valid order block, or your valid what refined order block on the market. Now the next thing that, so now that is it when it comes to the conditions for a valid what refined order block. The next thing that we are going to talk about also is what entry confirmation. For instance, if you are been able, or once you spot this particular, or once you've been able to refine it, when market gets to the zone, what are the conditions, or what are the confirmations for what for entry? You do not just enter because market what got to that particular zone, or market reacted from your refined what order block. You also need to understand how you can what enter. So with entry confirmation, there are also few conditions as well, or entry, depending on the kind of entry confirmation that you use. But I am going to show you about one or two entry confirmation that you are or you can use when market gets to what your zone. Now, the first confirmation that we are going to talk about is what the shift in market structure. When you talk about a shift in market structure, it is the first sign that market direction might change. So once market mitigates your zone like this, we go to our lower time frame structures to look out for a break. So let's say as market was approaching the zone and forming the internal structures, once we see the first sign of internal structure being broken like this, we now have a market structure shift. That gives us a market structure shift. So from our 1 hour time frame, which is where we identify our which is where we identify our refined order block, we can now go to our 15 minutes, which is going to be our executional time frame. So when we come to our 15 minutes time frame, can we identify a market structure shift or a shift in market structure from that particular zone? Now we have the mitigation around this point. We see that we had a break. We had a break of structure from here, and then we saw market breaking this particular high. So this becomes our market structure shift. So a shift in market structure is a first sign that the direction of the market might be changing. So you look out for your entry zone, which can be your order block, your fair value gap, or any other zone that you can identify. So we have a fair value gap around this particular area. This is a fair value gap around this particular area. So that or our fair value gap can then becomes our entry point for that particular trade. So once you've been able to identify your refined order block, you also need to go down to a lower time frame. So let's see if this becomes let's say this becomes our trade, or this is a trade that we are actually taking. If we use the 30 minutes time frame, we can see that this then becomes our order block, or we have an order block also around that particular zone. Also, we can spot liquidities, just as we talked about the confirmations for a valid order block, same way as the entry. So we have order block over here as well. So after refinement, if this becomes your trade from here, and we are targeting this particular point, and we are targeting this particular point. At first, we were having 1:2 raised to rod ratio. So after refinement, we were having 1:4 raised to rod ratio. But as we went down to our lower time frame, which is the entry time frame, which is our 30 minute or 15 minutes time frame, Now we are having a 1:7 risk to reward ratio. So that is the power of what order block refinement. It helps you to what increase your risk to reward ratio, reduce your lot sizes to prevent what more incurring what more losses as well. So let's try another chart as well. So let's go, or let's use silver for example. So when we go here, so let's see if we can spot. So let's try another example using what silver. Now over here, we saw what a break of structure, which indicate or which shows that market is bullish. We had market mitigating over here. So this is what our order block from the daily what time frame. Now, if we use this particular order block from this zone for a trade, we are going to have something like this, which is about 1:3 risk to reward ratio, but our stop loss is too big from here. So we are going to what go down, or you go down to a more lower time frame to see or to refine the order block properly. So if we come down to 4 hour time frame, we can see that we are having, or we can see that there is an order block, or we can still spot another block within this particular zone. So this is supposed to be our refined order block. Now, if we consider the conditions for a refined order block, we talked about aligning with what market structure. We know that we had a break of structure from here, so we are looking for what a valid bullish order block. So we are having what a break of structure, making this what a valid because it is aligning with what the direction of the market. We have imbalance from here. We can still what spot liquidity over here, and also liquidity over here, and also a displacement as well. So this particular order block is what a very what valid refined order block. If we go to 1 hour, when we go to the 1 hour, there's nothing much around that particular this particular zone. All right, so now the next thing that we are going to be looking out for is what our entry confirmation. So with entry confirmation, we talked about what market structure shift, which is the first sign, as the first sign that indicate that market might be changing direction. So we had a break of structure from this particular point. Now market broke this structural high. So we are having what our market structural shift. Then we look out for our entry point. Now we are having an order block around this particular level. So we can choose, or this particular one then becomes what our entry. And then, so we have our entry from this particular point. We have our entry from this particular point. then our L cell what below. So now what is the what then becomes our what, our trading stop loss and risk to reward ratio. So we are having about 1:9 risk to reward ratio and a tiny what stop loss as well. So that is it when it comes to order block refinery. So today we have talked about conditions that makes what your refined order block what valid, and also entry confirmation as well. If this video helps you to understand order blocks refining properly, please kindly ensure that you subscribe to the channel and also click on your notification icon so that anytime we drop a video, you are going to get, or you are going to get a notification as well. Thank you for watching.